Hey everyone, welcome back to We Are Cosmic, the place where we break down everything happening in the world of cryptocurrency, finance, and blockchain in a way that's simple and actionable. If you're someone who wants to understand crypto beyond just prices, how it integrates with real-world finance, how governments and banks are reacting, and where the biggest opportunities are, you're in the right place. Today, I've got some massive updates for you, and trust me, you'll want to stick around because this is going to be a game changer for XRP holders and crypto enthusiasts everywhere. Let's start with some breaking news straight from the US Federal Reserve. Kraken Financial, a chartered crypto bank, just became the first crypto bank to get a Federal Reserve master account. Now, what does this mean? A master account allows financial institutions to directly access central bank services like payment settlement platforms, FedNow, and Fedwire. In simpler terms, Kraken isn't just a peripheral player anymore. It's officially part of the central financial system. This is huge because it shows that the US Fed is making direct connections to the crypto market, something most people didn't think was possible a few years ago. Kraken co-CEO Arjun Sethi explained that this approval allows the company to operate directly within the financial system rather than through intermediaries. Think about that for a second. Crypto is no longer on the outside looking in. It's becoming a core part of how money moves in the US. This is not just big news for Kraken. It's a signal that major banks and regulators are starting to recognize the value of blockchain technology and XRP specifically, but it doesn't stop there. Let's shift over to Asia for a moment. Recently, a senior Japanese banking official confirmed that XRP is being positioned across multiple banks in Japan. Arthur Brito, one of XRP's co-founders, has repeatedly emphasized that XRP was built for global scale. Japan's banking adoption suggests that April 1st could bring a significant spike in activity on the XRP ledger, XRPL. This is important because it highlights a pattern. XRP isn't just a speculative asset, it's being integrated into real financial systems worldwide. Now, I know a lot of people watching this channel are impatient, especially with all the geopolitical uncertainty and market fluctuations. But here's the key takeaway. XRP has already been integrated into businesses and institutions, and Ripple is actively acquiring companies to bring them onto the XRPL. These moves are strategic and set the stage for long-term growth, not just short-term hype. I also want to quickly mention something I've been doing personally because it ties into the financial opportunities that come with crypto adoption. I recently signed up on CoinDepot, a platform that allows you to stake and earn yield on your crypto holdings like USDC, XRP, and Stellar. For example, I'm currently earning 17.5% APY on my USDC account, compounded weekly. This is the kind of opportunity that traditional banks rarely offer to regular investors, but crypto platforms make it accessible to anyone. I'll share a link later for those interested, but the point here is simple. While the market trades sideways, you can still grow your assets by stacking and compounding your holdings. We're going to dive deep into US Congress, the Clarity Act, and the Genius Act. These bills might sound complicated, but they're actually paving the way for XRP and crypto to grow within the traditional financial system, and that's something every investor needs to know. First, let's talk about the Clarity Act. This bill has been designed to give clear rules to crypto companies and stablecoin issuers. One of the biggest problems in crypto has been uncertainty. Regulators weren't sure how to treat digital assets, banks were cautious, and investors didn't know the boundaries. The Clarity Act aims to remove this uncertainty by defining exactly what stablecoins can and cannot do, how they should operate, and how companies can legally offer crypto-based services. A key point in the Clarity Act is that stablecoins cannot pay a yield like a bank would. Why? Because stablecoins are meant to be a payment token, not a bank account. The bill wants to prevent the misuse of these tokens as investment vehicles while still allowing innovation. This is important because it ensures that crypto companies operate within clear rules, and it also levels the playing field between banks and non-bank issuers. No one gets an unfair advantage, which is crucial for a healthy, competitive crypto market. Then we have the Genius Act, which complements the Clarity Act by reinforcing similar principles but with a strong bipartisan approach. Congressman French Hill, chairman of the House Financial Services Committee, emphasized that 78 Democrats joined Republicans last year to pass these bills. highlighting strong bipartisan support. What this means for crypto investors is simple. Regulations are not just coming. They're coming in a way that encourages innovation and protects consumers. Now, here's where XRP comes into the picture. Clear rules allow companies like Ripple to integrate XRP into financial transactions and banking systems with confidence. Instead of waiting in regulatory limbo, XRP can now partner with banks, businesses, and other financial institutions, making the coin more useful and widely adopted. Remember, adoption drives value, not speculation. The more XRP is used for actual payments and transfers, the more demand it creates naturally. There's also a strong push for decentralization in these discussions. Congressman Hill and others have made it clear that crypto companies should have the freedom to offer innovative products. For instance, platforms like Coin Depot, which allow staking and earning high yield on assets like XRP and USDC, are part of this new ecosystem. The more these platforms can operate safely and legally, the more opportunities there are for ordinary investors to grow their wealth outside of traditional banks. And speaking of banks, there's a reason traditional institutions are paying attention. The more decentralized platforms allow people to earn significant yields, the more competition banks face. Banks have relied on fractional reserve banking for centuries, using customer deposits to make large profits while paying minimal interest. Crypto is changing that dynamic, giving everyday investors access to financial tools that were once reserved for the wealthy. Finally, it's worth noting that regulatory clarity also boosts confidence among institutional investors. When laws are clear, big companies and banks are more willing to integrate crypto into their operations. That means more partnerships, more adoption, and potentially massive increases in XRP's utility and market value. First, let's talk about Ripple's acquisitions. Over the past few months, Ripple has been acquiring several companies that complement its vision for the XRP ledger, XRPL. These include Hidden Road, Real, and Palisade, among others. Each of these companies brings unique capabilities to Ripple, from payments processing to institutional-grade crypto solutions. Essentially, Ripple is building a financial ecosystem around XRP, not just leaving it as a standalone token. This is important because the more real-world use cases XRP has, the more its value is supported by actual adoption, not speculation. Take Hidden Road, for example. This company helps financial institutions move large amounts of money efficiently and securely. By integrating Hidden Road into the XRPL, Ripple enables banks and businesses to process transactions faster, cheaper, and more reliably than traditional systems. This is exactly the type of infrastructure that can attract trillions of dollars in financial flows to XRP over the coming years. Next, let's talk about Japan, which is showing serious adoption for XRP. A senior Japanese banking official recently confirmed that XRP is being positioned across multiple banks in Japan, and Ripple's co-founder, Arthur Brito, has emphasized that XRP was designed for global-scale transactions. This means XRP isn't just a regional solution, it's built for international payments, and Japan is one of the first countries to actively use it in mainstream banking. Why does this matter? Japan has always been a forward-thinking crypto market. Banks there are testing and integrating digital assets into real-world financial operations. When XRP is used by banks to settle payments, handle cross-border transactions, or support corporate treasury operations, it becomes more than a trading token, it becomes a financial utility. That's the kind of adoption that drives demand and usage over time. Another key point is SWIFT and cross-border payments. Even capturing just 1% of SWIFT-like transaction volumes could have a huge impact on XRP's value. SWIFT is the backbone of global banking payments, and XRP's speed, low cost, and scalability make it a strong competitor. This isn't speculative hype, it's practical financial integration that could realistically happen within the next few years. Ripple is also working on bringing more businesses onto the XRPL, integrating services that were previously outside the crypto world. For example, the technology allows companies to move money instantly, reduce fees, and increase transparency. Each new adoption or integration is a small step toward a much larger financial ecosystem, and XRP sits at the center of it all. Let's not forget the bigger picture. While the world is distracted by price swings, Ripple is quietly building infrastructure that could redefine global payments. This is why understanding the strategic moves of Ripple and XRPL matters far more than daily trading charts. XRP isn't just being held or traded, it's actively being used, tested, and integrated worldwide. Let's start with the basics. In traditional finance, banks offer very low interest rates, often less than 1% per year, and that's only if you have a standard savings account. But in crypto, platforms allow you to earn significantly higher yields by staking your assets or lending them to borrowers. One platform I personally use is CoinDepot, which has been amazing for long-term holders. Here, you can deposit USDC, XRP, Stellar, and other major coins and earn interest that compounds weekly or monthly. For example, I currently have a weekly compounded USDC account earning 17.5% APY. That means every week the interest earned is added to my balance, which then earns even more interest the following week. This compounding effect grows your holdings exponentially over time, and while the crypto market trades sideways or experiences volatility, your assets are still working for you instead of sitting idle. Now, I know what you might be thinking. Is this trustworthy? Personally, I trust CoinDepot because they have licenses in Poland and El Salvador, are fully audited by CertiK, and use Fireblocks as a custodian. They've been operating since 2021 with no major issues and have excellent reviews. This gives me confidence that my crypto is safe while earning high returns. The power of platforms like this is financial freedom for everyday investors. Before crypto, earning double-digit returns on cash or digital assets was only available to wealthy individuals or institutions. Now anyone can participate, which levels the playing field. It's also a perfect complement to XRP adoption. While Ripple is integrating XRP into banks and the XRPL, you can grow your holdings passively, meaning you benefit from both usage adoption and compound growth. Let's break it down simply. Imagine you hold 1,000 XRP and stake it on a platform offering interest. Even if XRP price doesn't move for a few months, your holdings increase every week thanks to compounding. By the time adoption picks up and XRP price rises, your total position could be significantly larger than if you just held the coins without earning yield. Another point to note is flexibility. CoinDepot offers weekly, semi-annual, and annual compounding options. Depending on your preference, if you need liquidity, weekly accounts are perfect. If you want maximum yield, annual accounts provide the highest return. This gives investors control over their strategy, balancing growth and accessibility. Passive income is also mental insurance in a volatile market. While prices swing, you're not sitting idle, you're making money every week or month, and because XRP adoption is accelerating, you're positioned to benefit from both asset appreciation and income simultaneously. This is a strategy that can significantly enhance long-term wealth building. Finally, platforms like CoinDepot make crypto more practical for everyday investors. You're no longer just holding crypto, you're actively participating in the ecosystem and earning real rewards. This is why combining XRP adoption news with passive income strategies is such a powerful approach. First, let's discuss Trump's recent statements. The former president has made it clear that he supports crypto initiatives that empower everyday people, especially in terms of wealth-building opportunities. He has criticized traditional banks for trying to maintain their dominance while limiting opportunities for regular investors. This is significant because XRP and other crypto platforms are creating alternatives to traditional banking, giving people direct access to financial tools that were once reserved for the wealthy. Trump's stance also highlights a broader geopolitical trend. Governments and powerful institutions are starting to recognize crypto as a legitimate part of the financial system, not just a speculative asset. When political figures publicly support crypto-friendly policies or acknowledge the benefits of blockchain, it adds confidence for investors and institutions alike. This is especially relevant for XRP because adoption by banks and payment networks depends heavily on regulatory clarity and political support. Speaking of regulation, the U.S. Congress and agencies like the SEC are actively working to define the rules for digital assets. SEC Chair Paul Atkins has emphasized the need for clear rules in digital asset markets, which benefits companies like Ripple. Clear regulations reduce uncertainty, making it easier for banks, businesses, and institutional investors to integrate XRP into their systems. This is exactly the kind of environment that encourages widespread adoption and long-term growth. Geopolitical factors also play a role. Countries like Japan are already integrating XRP into their banking systems, and other nations are observing how these experiments unfold. Meanwhile, in the U.S., lawmakers are discussing crypto market structure bills that aim to protect investors, allow innovation, and prevent unfair advantages between banks and non-bank issuers. This bipartisan support signals that crypto regulation is being approached in a balanced way, not rushed or overly restrictive. Now, why does this matter for XRP holders? Because adoption is not just about hype, It's about real-world utility. When governments, regulators, and banks are aligned and supportive, XRP can move from being a speculative token to a functional part of the financial system. This includes cross-border payments, treasury operations, and potentially even being used alongside stablecoins in day-to-day banking. Platforms like CoinDepot also benefit from regulatory clarity. With clear rules, platforms can legally offer high yields on crypto holdings, enabling everyday investors to grow their assets while the market matures. Combine that with Ripple's acquisitions and XRPL integrations, and you have a scenario where both the price of XRP and investor wealth can increase simultaneously. Finally, it's important to note that political and regulatory support isn't just theoretical. It affects the flow of money and adoption. As Trump, lawmakers, and agencies express support or provide clarity, more institutions are willing to adopt XRP. That could trigger significant increases in transaction volume, usage, and ultimately value, especially if XRP begins to capture even a small percentage of global payment flows like SWIFT volumes. First, let's talk numbers and projections. Even if XRP captures just 1% of global SWIFT-like transaction volumes, analysts estimate the price could reach $4 to $12 per coin. That's not speculation based on hype. It's based on real adoption and transaction volumes. Keep in mind, XRP is faster, cheaper, and more efficient than traditional banking systems. This makes capturing even a small market share entirely plausible, especially as more banks and financial institutions integrate XRP into their operations. Now, consider an extreme scenario. If XRP were to capture 10% or more of global payment flows, prices could skyrocket. These are long-term projections, but they highlight the huge upside potential when adoption, regulatory clarity, and infrastructure come together. Ripple's acquisitions, XRPL integrations, Japanese bank partnerships, and U.S. regulatory support are all part of this growth story. Each step increases the practical utility of XRP, which is what drives sustainable value. Next, let's talk strategy. For most investors, the best approach combines holding and compounding. Holding XRP allows you to benefit from adoption and long-term price growth. Compounding platforms like CoinDepot allow you to earn yield on your holdings, increasing your position passively while the market develops. For example, staking USDC or XRP with weekly or monthly compounded interest means your holdings grow even if the market moves sideways. This is a smart way to manage risk while still taking advantage of the upside. Another strategy point: stay informed, not reactive. Many traders get shaken out by short-term price swings or fear-based headlines, but real value comes from understanding adoption, regulation, and market infrastructure. Watching Ripple integrate new businesses, seeing banks adopt XRP, and tracking legislation like the Clarity Act and Genius Act gives you a much clearer picture of long-term trends than daily price charts ever could. It's also worth noting the role of geopolitics and U.S. policy. Trump's statements supporting crypto and lawmakers creating bipartisan rules are not minor details. They directly affect how quickly XRP can be integrated into banking systems. Political support and clear regulation reduce barriers for adoption, which in turn drives transaction volume and usage. In short, politics plus regulation plus adoption, long-term value for XRP holders. Finally, let's summarize the key takeaways for investors. Adoption is real and global. Ripple is acquiring companies and integrating them into the XRPL. Japanese banks are using XRP, and U.S. institutions are slowly connecting to crypto. Regulatory clarity is coming. The Clarity Act, Genius Act, and supportive statements from politicians create an environment where XRP can thrive legally and practically. Passive income enhances your strategy. Platforms like CoinDepot let you earn compound interest on XRP and stablecoins while you wait for adoption to increase value. Upside potential is significant. Even small adoption percentages in global payment networks can lead to meaningful price growth for XRP. Long-term focus beats short-term fear. The real story is adoption, utility, and integration, not daily price swings. Staying informed and strategic is the key. In conclusion, XRP is no longer just a speculative coin. It's becoming a practical, high-utility asset in global finance, supported by strategic acquisitions, regulatory clarity, and innovative yield opportunities. For anyone looking to grow wealth with crypto, understanding these trends and using tools like CoinDepot can position you for long-term success. Thank you for sticking with me through this 6-part breakdown. Make sure to like, subscribe, and comment below if you found this helpful. The crypto future is happening now, and XRP is right at the center of it. Much love, and as always, peace out.